Okay, we are live. Roy, how is it going, sir?
Boring day on the market. No major earnings, no major events. Just calm, flat, Nice, relaxing. Not a busy day, personal day at all, except the opposite of all that. So, how are you?
I am exhausted. In the future, if Anthony Noto is listening, please don't schedule your earnings call on days when I have to go into the office, which are Tuesdays. But yeah, I had to do the earnings call, then run into the office, and then focus on work, and then come back. And I came back around 6:30-ish, had some dinner, posted some shorts, and now I'm here.
Yeah. For me, it was the busiest day of the month, easily. And not only was SoFi having earnings this morning, in the busiest morning, I had 3 meetings almost back to back. PayPal did as well. And we're here to discuss both. We'll maybe talk a little bit of Microsoft, maybe some Tesla, possibly CrowdStrike. We might even have time for me to besmirch Canada a little bit. So,
we definitely have time to besmirch Canada. If there's no time to besmirch Canada, I don't want to do this pod anymore.
That's right.
What's up, Tanner?
Ladies and gentlemen.
Get out of here with your bullshit. It's not your show, Tanner.
Some PayPal, some SoFi.
You mute him.
Let's take this shit to the moon. How are you guys doing?
Good. Tired, but good. Yeah, some of these days have weeks inside of them, and that this is one of those days. So I'm still trying to catch up. I feel like a dog paddling, just trying to make it to the other side.
Did you?
Well, what do you guys like more, SoFi or PayPal?
Did you close Fintech Frenzy to be here?
Yeah.
So this is the better show. I think Tanner just confirmed on live stream that Bootleg Weekly is better than Fintech Frenzy. Thank you. That is all we needed. The 75 of you that are here can attest to this confession. That's all we need. Roy, we made it in life.
That's right. And by the way, guys, we will discuss SoFi earnings a bit tonight. We're going to save most of that discussion for SoFi Weekly, which is on Friday. So we won't go deep into that. We'll go surface level. Hey, PayPal had the better earnings, honestly. They did.
They looked really good, but I saw the high level numbers and nothing else. I hear they're doing more buybacks. I know nothing. Okay, I am a blank canvas. So let's jump into that.
All right, Tanner. I did not see. I saw that you did a separate live stream afterwards, and I had not had a single second to even watch that. I'm sure it was good content, but let me ask you, Tanner, what did you think of the earnings for PayPal?
I thought it was good. I haven't deep dived into it nearly as much as I have SoFi, just because I'm putting out some videos for that first. But unbelievable. I think that Steve will be a happy camper with the share repurchases. I think that there were a couple I love the small, intricate details that PayPal's able to give on their business that just get my juices flowing. So we'll talk about some of those and get Tevis interested in this company, but the guidance increases were crazy. The share repurchases are crazy. The balance sheet is healthy.
Yeah, it was. I actually think quarter one's earnings, for me, for the numbers that I look for, and free cash flow for me myself, with where PayPal's at, that's the most important metric. Sorry, guys, I'm tired. Price to free cash flow. And so I liked quarter one a little bit better, but I mean, quarter two was really, really good. And the thing that quarter two did, I guess two things. It was a little bit different than quarter one. There's always been, and even a little bit in quarter two, but there's always been just a little area where I'm like, oh, bears can probably latch onto that. And I guess because of SoFi, I have a little post-traumatic stress disorder from that, where I'm like, oh, this one number is out of whack and 98% are good. It's going to tank because freaking bears, they'll shift their argument. They'll oh, this thing that was all the whole bear thesis, that's no longer valid. Well, then this is actually what's important now, not that one. We don't care about that anymore. And they've done that with PayPal. I mean, they do that with every stock. It's the same thing. this was one of those earnings with PayPal where, while I didn't think the numbers that were important to me were quite as good, there was very, very little weakness. The weakness that was there, it was like you can even see year over year. Yeah, maybe they're down in active users. Year over year, you look at some margins, and it's like, yeah, it's down a little bit, but you can see that we've hit the bottom on both of those, and there's no reason to think otherwise. Just an incredible beat, especially with EPS. Let me pull that up. So if you have this kind of an EPS number of beat, you think it's maybe a SoFi, maybe a Palantir, Robinhood, something that's very new to profitability. So non-GAAP EPS beat was up by 36%. And let me see. Do you have the GAAP, Tanner? I thought I put it in my post and I didn't. So
it was no, I only covered the non-GAAP, the 119.
Yeah, that's their preferred measure anyway, especially now that they're
really GAAP because they've also included SBC and everything in it as well, and tax-related expenses.
Yeah, this is one thing.
Like you guys, this just before we dive into real stuff, I texted Steve. And this is my text. I took a screenshot for you. I said, "Stevie boy, come on the pod. We're live talking PayPal." And Matt's on this group too. I said, "Matt, you too." No, I'm not getting up. Sorry. So there you go.
I guess the earnings weren't good enough for him to get up. So
that's
got to do better, brother.
Man, these would make me jump up,
dude. I'll go back to earnings in just a second, but it was tough because I was on the freaking road, and it's Houston, so they stop and go and traffic jam. So I was being safe, but I was listening to you guys and then the SoFi earnings call. But when the PayPal earnings call started, I'm like, I'm going to get into SoFi a little bit later, but I'm going to jump into PayPal. And so I tweeted out like one or two things before I left for the day. But when those initial numbers came out, and like the stock was up like a couple percent, it was like $60. I don't know. It was several dollars under where it was, just barely over 59. And I was like, all the cash that I have, PayPal shares right now, immediately, before we even open up. Because I'm like, looking at the headline numbers and then just briefly like what they mentioned in that initial shareholder letter, even before the slide deck was out, I'm like, there appears to be no weakness right now. It's crazy. So,
I mean, the interesting thing is like being from North America, especially the people that I talk about, do not talk about PayPal, but there was no weakness even on the TPV for US specific growth. Monthly active accounts, which I think is more important than active accounts, like even the way that it looks in their slide looks juicy. Like the growth rates are accelerating. It's not that the number is accelerating; the growth rates are accelerating. So, Tevis, can you bring this up?
Yeah.
Definite deceleration in their business, and for a little bit, this is sort of when we were accumulating. It was very hard to buy and hold during these times because people didn't know if this was a value trap or not. But now that this is starting to re-accelerate, TPV is starting to accelerate. Look at the amount of transactions. Like, it's just unbelievable, and from every part of their business. So it's not just branded that's doing well. It's not just Braintree that's doing well or Venmo. They all seemingly are going in the right direction.
I didn't bring you nerds to open up the supplemental information slide first. All right, talk to me like I'm 5. Explain PayPal earnings. Assume I know nothing.
Do you know what monthly active users are?
So you know how there's the internet, right? And then there's money, right? Put those two together.
All right. So here's a monthly active user fact that I was actually just about to tweet out and I ran out of time because I heard it mentioned, but I was driving. I went through the slide deck again and I'm like, oh man. So Venmo, you guys don't have in Canada. Venmo is quite large here in the United States, quite large. Monthly active users, and Tanner, if you know this, don't answer it, but monthly active users, month over month, went up by what % for Venmo?
I don't know.
Keep in mind, it's very large, and it's really just North America or United States.
How like what's the user base for Venmo?
Let me pull that up.
Can I guess?
I think they have monthly actives. I think they're at like almost 80 million, right?
80? I was never gonna guess 80. Jeez.
Venmo users.
Yeah.
I used to know this, but it might have changed, and I didn't see it in the slide deck. It's up 30% month over month. 30 freaking percent.
Wait, month over month, like not quarter over quarter?
Over month.
According to what? I want to see this.
All right. I'll pull it up here.
All right, I have this up on my other
I
screen.
don't believe that at all.
It was mentioned in the call too, and I vaguely remembered it, and then I saw this. So it's maybe it's not every segment of Venmo, but it's So
what's that little one over there, Roy? What's that little footnote?
Year over year growth.
No, it's Venmo debit card and pay with Venmo monthly actives are up 30%, not Venmo actives.
Oh, and it's not, Venmo monthly.
But it's also up 30% year over year.
Pay, no. You're looking at Venmo monthly actives. It's pay with Venmo.
Yeah.
So that's like saying Cash App Pay is growing at 50%.
Roy,
or
come on,
or the buy now pay later product. Yeah.
Still,
Okay.
That's still very exciting, but
yeah, no, that's a small segment, and that's actually they did cite Venmo as improving margins, which is weird to me, and Braintree, like that was another thing that just kind of blew me away. In the past, under Dan Schulman, previous CEO of Tevis, everybody's like, "Oh, Braintree is this product that is used for a white label payment platform," and so it was driving a race to the bottom. That's why it was beating out Adyen and Stripe. And I didn't think that was fully the case, but there seemed to be some truth to it. I think more than I gave credit for. And under Alex Chris and Jamie Miller mentioned this as well, that they were having these conversations. They were selling other value-added services as well to improve profitability there. And so they specifically cited Braintree improvement as one of the reasons why the margins got better than what was expected.
Yeah, I agree with Laura here. Like Venmo is probably the most exciting thing, like from a pure product perspective around PayPal. Like I'm just looking at the report, 8% increase in net revenues. Like that's not anything that would get me really excited. So it's Braintree, Venmo, these avenues that have actual growth as opposed to the flagship brand, which is like, it's not that exciting. But that's, I think, flagship, like I don't know, like this is just my
least exciting. I could care less about Venmo.
Yeah.
How so?
The take rate on Venmo is horrible. So the way to think about it is like PayPal branded has by far the highest take rate, not only like for PayPal, but like almost industry wide, right? Then Braintree is kind of right in the middle, kind of on par with just like the regular Visa, MasterCard sort of 2.9 plus 30 sort of era. And then Venmo is all the way down at the bottom at being some of the lowest take rates across the entire industry, which is great. But then it should have some sort of subsequent growth. But like getting dropped from Amazon and stuff kind of goes against that thesis. I honestly think what could be really a growth driver for PayPal is just reinvigorating that branded name. If you start bringing PayPal, tap to pay, the security of PayPal, like all those things that people love and know about PayPal, and drop all the garbage stuff about like, we're going to fine you $2,000 if you talk in a certain thing online. Like they've taken a hit to their reputation, but I don't think that it's not repairable, and keep those high take rates. And that's what they're doing. Branded's growing.
Yeah, I mean, like everything's growing, and it's growing by more than expected. And this is before the new products really hit. PayPal Complete Payments has rolled out a little bit more quickly under Alex Chris, but the guy is basically brought in the company. The man who's in charge of the company is asleep at the wheel, has been for a while. I won't say anything more about that because I don't know, but it just he kind of drove the company in the ground in many ways, made bombastic claims, and executed very poorly. Alex Chris, other than one exception, does the opposite. He makes very cautious and conservative claims, except for one statement, and you guys know what I'm talking about. And you can put it in the comments if you want. And then actually executes far better than anyone expects. So as far as PayPal, like the net revenue, that's good, but the transaction dollar amount, like when you're this big of a company, you're not looking for Tevis, and like even with EPS, you're not looking for a 22% or 21% revenue growth rate or something. Like if you do that,
It would shock the world.
You're NVIDIA. Oh yeah, you'd shock the world for sure.
He's changed the
mission
world.
accomplished.
The funniest thing is like I know next to nothing about PayPal, and I just put money in the stock just to be a part of the conversation, just for the giggles, you know. But yeah, I think the valuation is the thing that's attractive to a lot of people.
Oh yeah.
If it was growing 20% sustainably, it would not be trading where it's trading, right? And so it's just how much juice is there relative to what it's trading at.
Yeah, the EPS is really that's a combination of a lot of factors, not just top line, but also bottom line excellence. That they had a lot of fat to cut under Dan Schulman, and they've been doing that very well. They had just a lot of little positive surprises, some extra innovation as well that's mixed in here, and of course they're buying back shares. And so they Tanner mentioned it, but they accelerated their buyback program again. So that's as much as their free cash flow this year. So it's $6 billion. A buyback. If PayPal stayed where it was and just stayed flat on earnings, that's about 10% of their shares that they're buying back on the year. Now there's
over what time period?
A year.
And starting when?
A year.
Starting this Q3?
If PayPal was throughout the entire year, $60.
No, I know, but they announced it today.
Oh,
so they're saying going forward, we're going to do an additional $6 billion or
an additional $1 billion. So it went from $5 billion to $6 billion. They have $5 billion pledged next year as well.
Yeah, it's for fiscal year 2024, not going forward.
So by the end of the year, essentially in 2024, they plan to have bought back $6 billion total
for the full year, including the months that have already passed.
How much have they bought back thus far in the year?
3.
Okay, so they plan to buy back another 3 before end of December.
Yep.
Cool.
You want to see a chart on their outstanding shares? It looks like just take SoFi's and flip it upside down.
Yeah, for real. And Palantir as well. Let's throw in that. They do have, because they've had a lot of new hires, they do have some stock-based compensation that's a little higher than their norm. And so that means, if PayPal had stayed at a 60 billion market cap, they'd be removing about 7.5 net. It's around there. It's impressive.
So almost 1.2 billion shares outstanding to 1.05.
This looks like my student loan payback. Like this is the most unsexy slope I've ever seen. It's like
I could remove here. Wait, I can do this.
Show them.
Yeah.
Okay, that's better. Come on.
Yeah, but that's chart crime. I can't do that.
I called that out actually on this exact graph that somebody posted. I'm like, it's a chart crime, but I mean, it's great. It just you want to see this, especially in a mature company, rather than going the other way around. And it's not that they're not spending on research and development. It's not that they're not innovating anymore. They even mentioned using a little bit more money in the second half to scale these new businesses segments that they have. So, this is one of those companies where, maybe you don't find it the most interesting in the world. I think what they're rolling out is actually really interesting, especially Fastlane. Did you catch before, Tanner, that it was platform agnostic? That they use Fastlane on Braintree, Venmo?
I knew that.
Yeah. Just they reaffirmed that a couple of times, and I'm like, good, let people know. But yeah, I this company, it just, even now today, where it's risen up 7.5%, not quite 8%. It was up 10% for one brief second, and I didn't screenshot it in time. But it's still very undervalued where they're going. I need to dig a little bit deeper onto the earnings itself and just do a write-up tomorrow, but very, very impressive. There's really not much to add. You're obviously not too interested in it, Tevis, and that's okay.
Sorry, I'm interested. You said Tevis's name anyway, so I'm going to shut up.
No, you Tanner. I was wondering if there's anything else, because you haven't gone through on a deep level on this yet, but was there anything else that stood out to you on their earnings?
No, I think the thing that's exciting about PayPal is that people are saying this is a dead or dying company, and it was winning across the board. Cross-border payments are up. Here, North American payments are up. Total payment volume is not just up; it's record-breaking. higher than holiday spend. That's crazy. Total accounts, active accounts are growing. Monthly actives are growing even faster than that. Like, and all while we were going through this company a couple quarters ago, and they were like, what was it called? Happy returns and all of this other garbage that was a part of the company that they were like, oh, we're getting rid of this. We're getting rid of this. And now it's like, you really understand, like, no, this company's just more focused. Like, there's a job to be done and they are doing it. I was in a call earlier today with a bunch of other live streamers, and they were talking about how, this company needs to get, brought out to the back of the barn and shot and stuff like this, or like the management. I was like, what do you guys know about this company? I know that you guys are like broad market, commentators, but you don't even know that like 16 executives have been replaced over the last 3 quarters. Like, the thing that you want done has been done 3 quarters ago.
Yeah.
And so I think that the expectations of the past cannot be forwarded to now. And I don't know. Those are the people that are essentially betting against the company right now, are those people that may not be putting in as much work as Crossroads is and doing every little bit of deep dive. So yeah, this is where, some great gains can be made, because you may know this company better than 99% of the other investors.
Dude, there was even some analysts. It was one of the funniest things. And I think it's because it's so frustrating, actually. If anyone from PayPal or SoFi is watching, like, try not to schedule your earnings if you can, like on the exact same day as another major fintech. Your analyst, like I saw some analysts, was it Dolev? I think Dolev might have asked a question for PayPal as well. It's like,
he did, yeah. I don't even know how he did that. He like literally asked the question for SoFi and PayPal at the same time.
I don't know, but I know that some of the analysts cover, both of these companies. So it makes it hard for us who are amateurs, much less actual analysts, to be able to follow so coordinate. Or move it to the evening or something. Not Tuesday morning, right, Tevis?
Not Tuesday morning ever again. For either of them.
Yes.
We got through the appetizer. Are we ready? I feel like the chat is like gonna maul me through the screen because they're like, SoFi. So have they talked about it yet?
So we can't talk about SoFi.
We're going to talk about SoFi.
Yeah. Shall we move on to the SoFi chat? Is what I'm saying.
I got to go in like the next 60 seconds.
Yeah.
Perfect.
You in this whole chat fucking hate me. No,
this whole show is bootleg.
Yeah.
We can't get too deep into the PayPal things, but I'll do a review. I know Tanner posted a lot of his thoughts in the video, so you guys, if you're interested in more, definitely check those things out.
Tanner, if
you guys are pivoting to SoFi, can I bring up one point on SoFi and then leave?
Yeah.
Okay. Go ahead.
I was gonna ask about PayPal first, like whether you're a buyer, holder, or
holding.
Not adding.
What I want more of SoFi, and also, earnings season just started. I love these companies, but there's other names I'm very excited to see. I'd love to see, like, I don't know, something within Nubank not quite go the way that they'd hoped, and it just like go down to $9-8. I would buy that up like crazy.
Show your fancy charts so we can pause the video and rip them off you and then leave.
Okay, perfect.
I'm just kidding. I love you, Tanner. Stop.
No, it's just this. It's just this. So copy away.
Pretty sure that's not yours.
These are very interesting, and I passed over them whenever I was plugging in all my numbers for my little dinky spreadsheets. But these are really important. Okay, so essentially, let me help you break this down and understand this. In the $35 billion of originations between 2020 and Q1 of 2024, it's been all paid back, aside from 44% is remaining. Okay, there's 44% of unpaid principal balance remaining. Out of that entire amount, 3% or $1.2 billion has actually not come back in terms of losses, right? These people that we thought had good credit scores that were lying. Now, let's read this. In order to surpass 8% life alone losses from this vintage, this $35 billion 2020 to Q1 of 2024 vintage, to get to that 8%, this remaining 44% would need to experience 11% loss rates. If that doesn't happen, SoFi is going to be well above expectations. Okay? Not only that, one of the things that Chris said, past vintages have performed meaningfully better after this point in the seasoning curve, further improving our confidence in achieving loss rates below 8%. What does that mean? Well, in everyone's life, there's a certain part of their loans where it is a much higher chance that they don't pay back, which is kind of like in the second, it's almost like in the second quarter of their loan out of the 4 quarters, okay? That there's a potential for very high losses. But we are on the other side of that curve. Mm-hmm. So SoFi is going to be way under this 8%. And not only that, the current loans that they're doing are way above, or sorry, are performing way better than this vintage that we're talking about, that the remaining 40%. So this idea that SoFi's credit performance or something like this is going to get washed down the drain is just absolute baloney. I know people don't want to call SoFi a bank, and it's everything more than a bank. But if we were to just take a step back and realize how much money lending makes, right now it's a lending company, and we are doing freaking amazing. So good. That's all.
Yeah, that was in a direct answer to many of the bear arguments was around that. And they didn't just say, yeah, let's do a slide and a comment. No, 2 slides and multiple comments by Chris.
Many comments.
I don't remember. Was it the 11%? He referred to it before beyond that quote. And he said, I can't remember if it was that it had never been that high or hadn't been that high since. And it was like multiple years ago when they were a tiny company. They didn't know what they're doing. So
it's never been that high. Yeah.
Never. Okay. Yeah. It would be something really, really, really crazy would have had to go wrong. So basically there's no way that this is even a credible bear argument anymore. And I loved the attention to that. And the cool thing is, I don't think that the earnings were excellent, amazing. They were good for SoFi. Not great. And based on the previous quarter, that was enough to tank the stock. This time, I think a little bit of that defense that they played really kind of helped. So
I think it's awesome. I know Tevis doesn't like talking about the parts of SoFi that are most important. I'll let you guys talk about your members and product growth.
Hold on. Wait. So how would you characterize these earnings? So we talked about SoFi. We talked about PayPal. Which do you think had the better earnings?
SoFi. This is what I think. I think that PayPal had good earnings, but it was extremely linear, and it shows sign of a revival of a company that people thought were previously dead. I thought with SoFi's earnings, it was like a direct attack at bears. Like, these are the things that you guys think we're not doing well. Well, guess what? We're doing freaking amazing. Right?
Tanner, just look at the chat right now.
All right. See you later, guys.
See you.
Thanks, Tanner.
Bye. Yeah, I got tacos waiting for me. Bye.
All right. Now that fucking nerd is out of here, let's talk some SoFi.
All right. Yeah. Now, what does that guy know about SoFi, right? It's not like he's on a weekly. Wait a minute.
Yeah. Bye, financial advisor Tanner. All right, Ray, what'd you think of the earnings? You weren't there for the earnings report, man. No. I already gave all my thoughts. I'm exhausted from my thoughts.
Yeah. Well, first, before I talk about what I think of the earnings, what I think of the chat, you guys are so freaking hilarious. Like I had to be careful not to be drinking while I read a comment because that would have ended in a disaster. So keep it up. As far as earnings, yeah, I caught them way, way later in the day. I only saw top of the line results. I think I peaked at like 2 or 3 slides. They for the most part were what we were expecting in our predictions. We were all in the same ballpark.
Not you. You were like 100K off of like members. You were like millions off. Dude, you took the low end of everything.
No. I mean, look, but even then. So let me show you. Roy? Yeah, I was the most off, but I mean, we're all in that clumping. So
So hold on. Let me just say one thing, Roy. All right. The internet remembers this shit. Okay. You cannot bring up every 6 months my Palantir SoFi bet and like rub it in and then be like, oh, we were all kind of close on the earnings. I will hold that one against you. Go ahead.
So okay, but what about price prediction? Who predicted the most accurate price so far? Now we did say Friday.
What did I close at? Hold on. 742. Yeah, I think. Well, you're at 650, right?
No,
$7.
$7.
All right, then you got the price prediction.
There we go. What matters the most to this community?
I don't know.
Price prediction. We don't care about the tech platform
like,
and members and financial platform and lending and EPS.
In my defense, this community is all idiots though. Like they don't care about the top line, they don't care about the bottom line, like they care about the dividend.
Yes, the dividend on barely profitable SoFi, which is largely a bank. Yes, let's shoot ourselves in the foot and buybacks at the same time.
Anyway, continue.
I predicted that we'd have between these two numbers, new members. They actually exceeded that 41% growth. I really like seeing that. Loved being wrong there. And who cares about new product additions? Galileo. Tech was one that was just, I was right on, but I think we were all right on, to be honest. Like that was the one bear thing that's kind of left that's credible, that has some legs. And I know bears will say do anything. But it grew 21% year over year, largely because it's another weak quarter. They can't keep doing that. Let's see, where is that? I don't know. It'll take a while to find. There's a million slides in this thing. But no, you guys don't really care about the charts. I'm not Tanner. So but tech, for the longest time, it's in the pipeline. It's in the pipeline. It's in the pipeline. They need to call a plumber at this point. Like just get the Super Mario Brothers out. Who cares about the price? If it's still in the pipeline, it's stuck in there and they got to do something about it. So, that's all I'm saying. That's the one piece that I really didn't care for. I thought everything else, including the call itself, was done really well. They did a good job of explaining their strategy when it came to lending, when they would accelerate that portion. And we did see some acceleration in lending as well. And so I think what they did on that segment, financial services, we knew it's going to be good. Very good quarter. And I think you probably agree more with Tanner as far as the excellence.
What excellence?
Do you think, would you characterize this as just an absolutely amazing, stellar, excellent quarter for SoFi?
Yes. I was in the morning, I was saying that, okay, sure, tech was a little soft and people are going to hold that against the company. But, other than that, I think it was like a 10 out of 10 earnings. I think the best call that I've heard from the executive team.
Yes.
They sounded confident. They were flexing on the call. They were throwing jabs at Robinhood, like literally on the call around the credit card. They're like, we want to be slow and steady. And they said, we think credit card can be bigger than the entire SoFi business is today. I thought that was really interesting. And then the closing remarks were the closing remarks. I mean, Anthony Noto cut off the Q&A portion. He's like, all right, guys, that's it. We're done here. I have a interview on CNBC right after this. I can't be, so I just thought that they were absolutely flexing because they knew the hand that they had, and they're not really beating around the bush anymore in terms of their results. Third quarter consecutive profitability. The business is scaling. Lending is stronger than expected. Financial services is a fucking juggernaut. So, I think that, okay, sure. Lending segment growing slower. But the thing that I said this morning that I'm going to reiterate again in my earnings recap is the tech platform is the one it's the segment that has the longest runway in terms of the amount of grace that people give it, because that AWS of fintech is really that like long-term vision of a multiple expansion for SoFi, of a tech valuation for SoFi. The short term is lending, the midterm is financial services, right? If you had to put them all on a timeline, lending is going to be the most important right now, right? Personal loans, student loans, that's the historic bulk of the business. Financial services is the fastest growing, that offers diversification, that offers them to have a differentiated product offering. It offers them a moat across the board. And then the kicker on the back of that, the multiple expander, is the tech platform, but that's not going to come to fruition in another couple of years at least. And so if it's growing, mid-teens versus 20% this year, I'm not really so concerned about that because we have financial services growing like 80% plus. So,
yeah. As far as the tech, like that, I'm not really upset about the 21%. Like, who cares? It's
Right.
very small. What I'm upset by is, and not as much upset because we saw that they actually responded to the bear arguments on the actual loans concern that they had. So with a tech platform, I would have loved to see, and I understand if they don't want to bring Derek White on just because they want to have some segregation between SoFi proper and Galileo. But I would have loved if he came on. They didn't do that. That's fine. And I would have loved if they just went a little bit more into detail, which they never do. And we've talked about different ways they can do that. It's a black box. It's everything that people accused Palantir of back in the day, that it was slow growing, well, not slow growing, but secretive, and had too long of a sell cycle and everything, and it wasn't very transparent. There you go. That's exactly what this is. Palantir is reformed. I know that Galileo under SoFi can. They just have to make a choice, and there may be a reason why they're not. Fair enough. But I mean, that's just one of those. Like, I have this feeling, Tevis, that it's going to be like level 1 freaking options, where we're like, hey, it's been like a year. What's going on with these? Hey, it's been like 6 quarters. What's going on with these?
For what?
Level 1 options. It's just
what is going to be like level 1 options?
The tech platform that again and again every quarter it's going to be the same thing, where they're just like, yeah, it's coming, long pipeline, top 5. I'd think that at some point it will absolutely land and just land out of left field, but we may hear this for a long time, and we'll never know if they're getting close or not, how things are really going, what they actually have in the pipeline, how long that pipeline is, how quickly revenue actually comes in. They gave us little breadcrumbs, and for me, when I first started investing in SoFi, I was satisfied with that. But it's been 5-6 quarters since I've been invested in SoFi. I guess 5. I don't know. It's disappointing to just hear that every single quarter, the exact same thing with no more light shed. And I'm still buying. I bought more SoFi yesterday, gladly, and of course I sold a bunch of cash secret puts again on Monday, by the way. So I would have had. SoFi would have been my number 2 position, twice the size of my number 3 position, maybe 3 times after today. So didn't happen. I don't think it's going down below 650.
Sorry, I'm just laughing at the chat. Look, level 1 option, they're 2 different things, right? They're 2 different problems, because level 1 options is a problem with execution, whereby SoFi's engineering team needs to get their ducks in a row in terms of executing and releasing new product offerings. And we know Galileo doesn't have that problem. They release like clockwork. But on the flip side, I mean, one of the things that I mentioned this morning was that you have a completely different beast, because this is the only B2B segment for SoFi's business. And B2B, we know, has long sales cycles. We know is very much driven by a sales pipeline. And if they lose one major deal or 2 major deals in the quarter, that's the difference between them like mega beating their numbers and missing their numbers. And so there's a really big outsized mind share that goes to each individual big client, especially because we know their strategy is to go after bigger and bigger deals. So that's why I think I'm not really that concerned about the tech platform. Is, we don't know the inner workings of it. We don't know the details around the tech platform. They could be just missing a couple of big deals, and all of a sudden the numbers don't look as good. We don't know, right? But we know that they're executing consistently, and I think over the long tail, that's the thing that's going to matter the most.
So let me ask you this. We saw yesterday that 20 million shares were borrowed to take out against SoFi. Doesn't mean that they were deployed. They just maybe had them on the ready for dry powder. Today, we saw just a very brief pop, not really selling off, but selling a little bit on a day that admittedly is weak for the market. So, what they sold off wasn't bad. It actually ended a little bit more strength. But we didn't see a big pop. We didn't see a lot of shorts as far as we can tell in the price action. And that's limited cover. We mentioned this before, that it seems with SoFi that bears always hone in on something out of earnings as the excuse of why it's just a bank and it's a terrible investment and we're all going to lose money and the world's going to end. So what do you think that the bears are looking at in this earnings, and the skeptics and the people that are on the sidelines and seeing that we're not?
Bro, that like it beats me, right? I mean, I was saying earlier today, like I don't understand how people can still have a bear case to be made for SoFi after they report these types of numbers, especially because let me pull this up on screen. I made this tweet earlier today, and basically what I said here in this tweet is just doing some very quick math in terms of their EPS. Like upward revisions are a certainty, right? They put 2 cents up versus 0 estimate in Q1. They put 1 cent up versus 0 estimate in Q2. Their guidance, 4 cents EPS. And I said, okay, you know that when SoFi says 4 cents, what they really mean is 6 to 7 cents EPS. So just do the math on these. You know, analysts were expecting this company to do between 6 and 8 cents EPS for the full year. And meanwhile, even if they just meet their guidance, let alone crush it, even if they just meet it, which in the past 2 years, they've never just met it, they've beaten it. But even if they just meet it, they do 7 cents in the first 3 quarters. Everybody who is covering this stock right now, every single one of them is going to have to be revising their targets upward. And so I don't know how you can still have a bear case, right? Because anything you say can and will be held against you. With SoFi, KBW said some shit and they got smacked for it. And executives are not playing around anymore, right? They're being pretty straight up, calling out competitors, you know, calling out stupid analyst price targets, calling out dumb questions. And the reason for that, and this is exactly what I want to see, right? I want to see this as an investor. I want to see them sort of get their groove, get their confidence, because they know what they're holding. And the longer that passes for the market to not recognize that, I mean, Tanner was mentioning it this morning too. He was like, look, at some point or another, we have to talk about the market repricing this company altogether. And we know that when companies just get repriced, you get a fresh set of eyes on them. And that stock price can surge dramatically because, like, if every analyst out there is forced to revise SoFi upwards in terms of what they can expect, then they'll take their 2026 guidance more seriously. Then they'll take SoFi's promises of new product offerings more seriously. They'll take, you know, future guidance for Q3 or for a full year more seriously, right? And so SoFi is being conservative. And one thing they reiterated consistently was that this is by choice, that we are not growing as fast. Even in his closing remarks, Anthony Noto said, we can grow much faster than this if we wanted to. But we don't want to do that because we want to play it safe until we can see what the rate environment is going to look like, until we can see what unemployment numbers are going to look like. And then we can decide from there. So right now they're in full control. They're in the driver's seat. And that's treated investors fairly well. Now, of course, not from a stock price perspective, but from an actual fundamental perspective, it's treated investors very well. And so I just don't know what the bear cases can still be for this company, for people to say it with a straight face and not look like a fucking idiot.
Yeah, somebody out there is going to be like, oh, they're not profitable on an annual basis. It's like, dude, do you think that they're not going to be profitable in Q3? Because guess what? Next quarter is going to be one of those, I think, just absolutely great quarters, as long as there's one rate cut, just one rate cut. And I think it will change the tone. I think that they'll be able to lend, or they'll be willing to lend, and able as well, a little bit more aggressively to help their existing loan book. And, rates, it helps SoFi. It's not saving SoFi, but the stock, like, I think that we'll really see that in the price action. We also have a very weak Q3. If you remember, kitchen sink earnings is not the right term. They basically took one last opportunity to adjust some things on the balance sheet before they were finally profitable in Q4 in preparation for this. So they have a very weak comp. And I think that the combination of that, along with student loans resuming, it's going to be a really, really good Q3. And also, the member growth as well. You have the NFL ramping back up, a little bit cooler weather over there as well. More usage of SoFi Stadium as far as events. So yeah, I was, pretty, compared to you guys, I was bearish. Compared to the actual expectations of analysts, I was just a hyperbole. I was Tom Lee of SoFi. But the reality is, like, I don't get it. I don't get the bear argument, because you see what they've done 3 quarters in a row. They're profitable. They're growing rapidly. 20, you can look at the top line number and be like, it's slower than it was. Well, of course they're getting bigger. But the only reason why that number is slower is because they're being cautious on lending, which you said, which they reiterated again and again on earnings. And they gave the conditions, which we might see in Q3 or Q4 this year, when they would open up that book a little bit more. So, and your date thing, the date thing, product launches, like why would you short this company? I get it if somebody's like skeptical and they want to be on the sidelines. They want to see if it really can be the fintech or the AWS of fintech. But like shorting the company to this level, I don't know if it's the highest right now, but it was fairly recently the highest shorted mid-cap stock, period.
Yeah. I mean, and we can talk about the new credit card products, because that was, I think, a nice prediction that actually ended up happening. I haven't checked. I was at work. I haven't checked if they did drop a PR for that or not. But look, I
don't think so.
SoFi trades in lockstep with other banks. It's seen in large part by the market as a bank, and rates help all banks. And so if you're looking at the rising tide to raise all ships, that's rates. Even though it might not be as applicable for SoFi as it is for like Wells Fargo, as you know, Lurker is saying, or whoever, they're all going to rise because of rates falling from a macro perspective. And so it's really going to force the market to reassess this company, because all of a sudden, I mean, you're going off some pretty low numbers for what the stock price is right now. So I think that's one thing to consider in terms of the rates. You know, and then the other thing that you mentioned was, sorry, it just got really dark. Remind me, what was the second thing you mentioned? I totally lost my train of thought.
Was it on the reason why it makes sense to be on the sidelines but not to short it, or are you talking about lending book?
Oh yeah, no. You mentioned the comparable year, right? Because they did GAAP numbers and they wrote off their Technisys acquisition for Q3. And so if you thought I was taking the top end of the range in Q2, boy, you're in for a freaking treat when you're going to look at my Q3 prediction numbers. They're going to be unbelievable. And right now, like, I took the top end of their revenue range, which was 555 to 565 million. I said 588. And they did like 600. Like,
I was thinking you're crazy. I was like, there's no way, because of lending. Like, but that's the thing is, last quarter we went in not knowing what conditions they would actually open up that lending book. They did some, and they told us very clearly in this earnings what conditions that they're looking for, and they've shown a willingness to actually open up that lending book. So I would be shocked if they don't use that, unless, you know, conditions like things really fall apart, you know, lots of unemployment and such. I don't know, man. Like I understand, like, before being skeptical, and you know, that's where my numbers are coming from, is I thought that they would do what they did this quarter or last quarter. His last quarter, again, they were saying, we're not going to lend, we're going to cut that back, we're going to grow it at 90 to 95% year over year. And I'm like, I don't believe it. And they did that Q1. Q2, we heard the same thing Q1. And Q2, nope, they opened up lending. It didn't make all the difference, but it helped a lot. So, and yeah, probably enough on the lending there, but it's just, do you want to closing thoughts on SoFi, and we'll save some for Friday?
Dude, I think this company is going to do like 15 cents EPS for full year. Not even joking with you. Like, I think 12 to 15 cents. And, you know, before, I don't know what I said in the beginning of the year. I probably said like, oh, maybe 9 to 12 cents. And I'm the one that's revising it upward. But like, you just have to think about that financial services segment and the growth rate there, and just try to map out how they're going to get to these numbers. And you get with some insane assumptions. And I think the subscription offering for SoFi Plus members is really interesting, because that flips their entire revenue model on its head, right? If you think about, you know, what banks are offering subscription models. Oh, wait a minute. Let's see if we can reassess this, because now we can predict out this recurring revenue a little bit differently. It's more towards a tech company.
By the way,
yeah.
You know who they got it from? Robinhood.
Robinhood, yeah. I mean, like, I'm fine with it, man. If it works, like, you don't have to reinvent the wheel. Just make me more money, baby.
Yeah. I what I really want, since Noto in an interview earlier, and of course his earnings call kind of poked at Robinhood. They are competitors in some segments, and I would love if Vlad just kind of mentions, other competitors are copying our gold model, and I'll be like, yeah, I'm in both these companies, but you guys can go at it that way professionally. But don't be like some companies,
I mean, like this is capitalism 101, man. Like competition is good. We win out in that scenario. If we didn't have strong competition, if these CEOs were not held accountable to comparable companies, they wouldn't be as innovative as they are currently, right? Like it's something that we should all strive for as investors. I hope Robinhood takes this personally. I hope they come out with something more aggressive, something more innovative. I hope SoFi, copies like back and forth for both companies, right?
Yeah.
And so
Yes,
it's a good thing to strive for as an investor. These companies, it keeps them sharp.
And there's almost never and that, I mean, people in these cultures, if they have a good strong culture that they want to be a part of, it's like your team, and you want your team to do well, and you'll work harder, not just because you're getting a paycheck, but you're like, I want to beat these other guys actually even more than help your own team. It can go too far, like with Databricks and Snowflake, and that rivalry is just nasty and actually destructive to both companies. But like that's the exception. But you're exactly right. If you have companies like this that are competing and they make it personal, oh man, owning both of those companies, that's a win. So I love it.
And I mean, look, this is also what I said prior to going into the earnings. I said, look, the more time that passes with a variance between the stock performance and the company performance, the more people are going to dig their heels in whatever camp they're in, right? People who are bearish are going to be like, Cavarini, because he was in our chat earlier, like Cavarini reiterated his $4 price target. Like, oh, yourself, like, how do you still come up with that number after you see these earnings? And then people like myself, I'm going to dig my heels in more, Chris Hager, Tanner, yourself, because we're like, dude, I can literally see the numbers, and then I can map those numbers out, and I can see what the trend is. And so how can I not? And so it becomes a very heated sort of camp, which pushes SoFi in the direction of, Robinhood and Palantir and Tesla, and very passionate at retail basis, let's say.
Oh, one more thing on the Robinhood versus SoFi. Robinhood has the 24-hour markets, and they were adding all these different names. They may have taken more than one off, but there's a name that you and I hold that they took off their 24-hour trading for multiple months. Guess that name, Tevis. SoFi. SoFi was re-added maybe 2 weeks ago. It's been fairly recent. And I'm wondering, so it was taken off. Then Noto made those comments in the interview about Robinhood. It was put back on, and then Noto does this. I'm wondering if it'll be taken back off again, or if Vlad mentions, a little something. Fun rivalry. I hope it happens. If you guys are listening, motivate your people, bulletin board material, whatever you need to do. Let's go to the moon.
Yeah. And look, I think Jeff also mentioned this. Like, what about the 3.0 hype? Oh, did we forget about the 3.0 hype, guys? Like, that is still on the table. I think, and I mentioned this even in our predictions video, in the weeks to come, there's a couple of certainties, okay? Number one is upwards revisions. Analysts are just going to be left behind and look stupid, and literally their job is to follow the herd so as not to stick out. Because if they stick out, then they're doing a bad job. And if they follow the herd and they follow the herd off the cliff, then it's like, oh, well, that's just the market for you. So upward revisions, because it doesn't take a genius to, do 2 plus 2, 2 plus 1 plus 4 is 7. And, oh, wait, I have 7 for 4 quarters and they're going to hit 7 for 3 quarters. I should revise this upward.
I wonder if it'll beat on the year. I don't know.
Yeah. So, and meanwhile, Cavarini is like, I think they're going to do -2 this quarter. So that's number one. It's upward revisions. Number two of what's going to happen next over the next couple of weeks is we are officially in Q3, right? Mm-hmm. We are in Q3. We got announcements on credit cards. We're going to have SoFi tweeting about them, releasing press releases. They're going to be explaining how these credit cards work. They're going to be explaining how the subscription works for the SoFi Plus. And they are going to be releasing more news. They're going to be talking about when can we expect these in the timeline. They're going to be talking about, what can we expect in terms of returns for this segment. Probably they're going to be releasing new, pieces of news. I think the sales and marketing is going to ramp up aggressively. I think that as we head into the new seasons of the respective sports, SoFi is going to be pushing hard, especially with the Celtics coming back as champions in the NBA. I think that there's a lot of news that's going to drop in Q3, and we're now getting into the back half of the year where we're going to start heating up again, right? Paired that with whatever we get on the macro side in terms of, are we going to get, when are we getting rate cuts? Is it September? What that's going to look like, elections, so on and so forth. Like, it is going to be a really interesting time, I think, for SoFi. And we know this, that the majority of their growth, or when it comes to fruition, when the story gets put together, is 2025, because it's, again, tangential to rates. But there's a lot to look forward to in the back half of the year. Like I said before, this quarter was the quarter that I was most concerned about, and they smashed it. So back half of the year, I could not be feeling more confident in this company.
Oh yeah. I mean, and the macro, something could happen. Like, what's happened today, and we'll maybe pivot to Microsoft here in just a second, because that was one of those triggers. But holding shares, I have time. This company is executing well, being cautious, overly cautious, but less so this quarter. I was pleased with that. It's clear to see the direction of the company. If someone doesn't want in, that's fine. If someone wants to short it, all right, try it. As far as Microsoft, did you catch any of the earnings at all?
I didn't listen to the call. I just caught just some high level stuff on X. Like Microsoft. Here, I'll throw some stuff up, and then we can chat about it. Did you listen to the earnings?
Most of it, yes.
Okay, well, so I saw this by Gene Munster. 11 out of the 12 operating metrics they beat, and the only one they missed was Azure, and the stock is down. I think the stock fell like 8% or something, and 8%, and now it's back to minus 4%. I think it's going to pick up. Again, I'm not really concerned. You have Brad here post amazing earnings snapshots. He did one for SoFi earlier today as well.
Yeah, he's the best. Follow him, guys.
Beat revenue, beat bottom line. All their segments are seeing great growth. I think that, Microsoft is Microsoft, man. They're going to keep crushing it.
Dude, yeah. That was really the tone of their earnings call. When Satya came on, he was just like, we're still Microsoft, and here's all the ways that we're freaking Microsoft, and like the numbers that he's throwing out are just ridiculous. Like,
I heard they also offered I'll see if I can find it, because I think I liked it as a tweet, but I heard they also offered everybody I don't know, maybe I sent it to you, but they offered everybody who was under a certain level like a big bonus or something. Did you hear this?
That might have been the part that I missed. So what I caught was some of the early remarks of Satya Nadella and remarks when they pivoted to the CFO, and then analyst questions. But right before that, throw this on the screen while you're looking for that. So this is a Microsoft snapshot, and I need to pull up actually NASDAQ here too. You can see after hours earnings came out, bam, they plummeted. We're trading in a range, and right here is when Amy Hood, their CFO, came on and talked about like exactly the concerns they were having. So part of it was the cloud, and she's like, "Hey, let me remind you that we are still Microsoft, and here's all these different things that we're doing." But one of those bearish concerns was they're ramping up their spend. And the concern was like, you're just doing that to ramp up top line revenue at the cost of margin. So basically it's like a PayPal Braintree argument almost. And the CFO was like, no, the reason why we're actually ramping up our CapEx expenditures, and they I think expanded their staff by like 2 or 3%. It was a decent chunk for them. Like, that's a lot of people. But is because of forward growth, or not paying for forward growth, but for scaling out these major projects and continue to be competitive like Google is in this time with the cloud space, with the data as a service type things. And it was like the perfect answer. And I can't quote it, but it's like, maybe a minute and a half segment that just you could see the stock pumping, and I was like, I don't hold this company other than just index funds, but like this saved the market. Okay, so let me see. I know it's not a stock, but yeah, NASDAQ right here. And right around the same time, I don't have it lined up, but that's when it just started rising after hours, really until the end of the day. And so Amy Hood, the CFO of Microsoft, saved the market, saved the bull rally, saved tech, at least for today.
Yeah, I mean, look, I think let me throw something up here because you compared this with Google, and I thought that was fairly interesting. This is Azure growth. Tell me if you see something similar in these charts. This is Alphabet's cloud growth.
Yeah, they look a little bit similar.
It's kind of hard to tell. It's kind of hard to tell, guys. So, but like, see if you can see a similar type of chart.
Like
But
even the same number as it, a 29% growth. It just, yeah, AWS is similar, by the way. It's a little doesn't match up exactly. And I haven't looked at the last 2 or so quarters, but it's almost like that these are related.
Yeah. And like, look at this, Azure off a much larger base. And so, like, I definitely think that this is going to be a battleground. I mean, AWS is in a league of their own, really, in terms of their market share. But this is going to be a battleground for the cloud services aspect. And I think Microsoft is not messing around, man. Satya Nadella has made some amazing moves over the past couple of years, especially with the whole OpenAI, stuff. I'm confident in his ability as an operator. Google has had a lot of stumbles. I mean, I'm just talking anecdotally speaking in terms of publicity. I mean, they're even having it now, right, with the search results for Trump versus Kamala.
Yeah.
So, yeah.
And President Donald Duck instead of, and it's like, what are you doing? Like, why? Just knock it off. Google, just print money, okay? Like, no agenda. Yeah. Don't be evil. Like, where is that?
And they were like a top donor to the Democratic Party. And so my point is like, I get it. Microsoft donates money too. I'm not making that point. What I'm saying is, if you're an outsider looking in and you're looking at the execution of these two companies strictly from a news perspective, Microsoft is just fucking killer, man. They're just executing at a top level. Whereas Google, it seems, is stumbling quite a bit. They get from, one debacle to another, one scandal to another. And it just, I don't know. I know that Google is a durable, strong, sustainable compounder. I just think that, it's hard for Microsoft to put up bad numbers.
Yeah. And by the way, one other thing that they did emphasize, and I think they did it well, is because of CrowdStrike, there's a concern on cloud security and cybersecurity. And so Microsoft mentioned all these things that they have in-house. They were the one that was affected. I'm actually here on this PC running Linux. So I'm like, I'm fine. I can do whatever I want. But anything that was attached to CrowdStrike and Windows just melted down. So I think he addressed that pretty well. He may have even thrown a jab there at Google. I wasn't quite sure. I don't remember the exact quote, but it was something like, we have in-house these capabilities, maybe alluding to Google's failed acquisition of Wiz, that cybersecurity company that they wanted.
So let me throw this up because I think that's a nice segue for this conversation. As I do this, if you guys haven't liked and subscribed yet, I don't know what you're doing. We're like bleeding viewers as soon as we stop talking about SoFi, but this is a good chat. Okay, so Delta to seek compensation from both Microsoft and CrowdStrike. And of course, they're going to add Microsoft's name there, even though Microsoft had nothing to do with this, simply because Microsoft is, they have deep pockets, right? So I said, okay, first of many lawsuits, blah, blah, blah. We're going to discuss on Bootleg. And then at some point earlier today, I tweeted and I basically said, let me see. Right. Okay. Prediction: Microsoft buys out CrowdStrike for pennies on the dollar. I mentioned this last week on Bootleg before the lawsuit started, but I think it'll become a great strategic move for Microsoft when the lawsuits continue. I think the lawsuits are going to continue. I think they're going to pile on to CrowdStrike. I think the stock is going to keep falling. And the reason why, and I could be so wrong in this, I understand that, but that's the nature of making predictions. The reason why I think is because I'm looking at the stock price action right now, and it's very clear to me that investors have not fully digested what CrowdStrike, like the magnitude of the shit that they're in, because it fell a little bit, started like recouping, and then it's just like bleeding. I think that more people are going to sign on to Delta's lawsuit. It's going to become a massive class action. It's not going to, it's going to be in the billions, is what I think. And ultimately, with how their CEO has been responding to this crisis and just the sort of window dressing around this entire thing. I mean, there's like reports that they knew this was a dependency or an issue. They're like scrubbing parts of their website to get certain like terminology off of their website. It's like full, control the narrative mode. I think Satya Nadella, similar to how he handled OpenAI and the Sam Altman debacle, he's going to step in, buy CrowdStrike, fold them into Microsoft, and shareholders are going to benefit from that. Again, could be wrong, could eat those words, but that's what I think is going to play out.
In the genius of that, there's a couple of them. You're getting CrowdStrike at a probably, I mean, we don't know. This is hypothetical and everything. We don't know the price, but at a much more reasonable valuation than it was a month ago. And Microsoft might have had trouble with regulators. Because, I mean, we had Amazon trying to buy a robot vacuum company, and regulators were like, no. So, I mean, with what happened, I think the United States government will have, and the EU as well, will have an interest in wanting to make sure that that doesn't happen again. Microsoft will make maybe somewhat credible arguments as far as bringing this in-house will actually help prevent that in the future. And that might be true. And yes, Satya, he's a wartime freaking CEO. He's a genius. I think he's the best CEO on the planet, honestly. And there's some very, very good CEOs, but if he's not best, he's number two. Jensen's
he's definitely up there. I mean, he's a killer, man. He's a stone cold killer. But look, I think with regards to the regulators and the government stepping in, like Microsoft is going to make a case where CrowdStrike is probably going to have some existential risk or risk of going under or something to that effect, and they're going to speak to the dependence that everybody has on CrowdStrike, how deeply rooted and embedded it is in all these businesses. And I think that their case is made up for them with just how much time was needed to recoup from this CrowdStrike issue, where they IT managers physically had to go in and reboot the hardware at that level. So, I think they're going to speak to the need for more guardrails, and Microsoft is going to be the perfect candidate to be able to do that. I think they can make it happen. I think it's going to become more of a discussion after more lawsuits start piling in. We'll see if it happens or not. But the more lawsuits start piling in, the more I'm like, oh, baby, Satya's rubbing his hands together.
Oh, yeah. I mean, your theory, it has a chance of happening, whereas a month ago, there was no chance ever that would even be possible. But if CrowdStrike is suffering. So I wanted to share this too, since we're still kind of talking Microsoft. There was a company, and Microsoft does a series of highlights where they're highlighting a segment. They're like, we're doing this with partners and expanding at this rate, at the rate of this percent. And so they mentioned this company, Tevis. Let me know if you've ever heard of it before. But he said the number of paid models as a service customers, this is for their cloud, more than doubled quarter over quarter. And we are seeing increased usage by leaders in every industry, from Adobe and Bridgestone to Novo Nordisk. And I don't know about this one, Palantir. You heard of that one before?
Isn't Bridgestone like a tire company?
Yeah, that one was just kind of
great company.
Maybe there's a different Bridgestone. I don't know. If you guys are in the comments, let us know. But yeah, they are a tire company as well.
Adobe, that makes outdated design tools, a tire company. What is Novo Nordisk is like a healthcare, a drug
pharma.
company.
It's an amazing pharma company.
And Palantir.
Adobe's all right, but this is more talking about.
I'm just kidding. I'll let you enjoy your moment. That was really amazing, and I think for the whole Palantir community, it's really cool to see that they're getting recognition. Like I still see Palantir as like a super itty bitty company where I'm like, oh wow, Microsoft is mentioning them. And then I look at the market cap and they're like a $50 billion company. I'm like, oh, well, they're not that small. Like they're more well known. And I think that perception of them being just a consulting company is like totally clouded by that AI aspect and the capabilities there. So yeah, man, keep getting after it, I guess.
Do you want to talk just briefly about any Tesla news? I know it happened last week, so we'd have to look backwards. But so there's two bits since we last met. One is registrations in China. It's the highest number in a good long while. I think actually ever, record breaking. China, of course, is benefiting as far as sales for Tesla because they're offering a 0.00% interest rate. And surprise, surprise, when they offer low interest rates, it's almost like interest rates help them not grow quite as fast. I don't know. And I know that this is, that they don't just magically create loans out of thin air that are no interest, but there's a cost to that. I thought that was interesting. And then the 12.15 is actually rolling out 12.51. 12.50 was what was before. 12.51 is rolling out now for full self-driving. Is this incremental change that I've not yet experienced, but I am so tempted by some of the users. I read it last time, but it's scaling out now, and they're talking about actually rolling out full self-driving to Cybertrucks. It should be, I believe, 8 or 9 days from now. Elon Musk deliberately tried to avoid saying 2 weeks because you know how his 2-week timetables are. So,
Roy, I fully expect a PowerPoint when whatever November comes around and Palantir is higher than SoFi. I fully expect you to be like, everybody just gathering all of Twitter there. This comment, I think, encapsulates it perfectly.
It's doubly ironic because Alex Karp rants all the time about PowerPoints and steak dinners. It's one of his things. It's great. So good job, Ross.
Okay, so yeah, I mean Tesla's Tesla. I think we talk about Tesla every week. So
yeah, that's fine. We can skip it for once.
Let me tell you one stock that I bought that it was never in my portfolio. I've never held it before, but I bought it today for the first time ever. Do you know what that stock is, Roy?
Palantir? No, that's not it.
Dude, at this point, I'm just gonna sell PayPal and buy Palantir and just be like, just for the fun, just for the content.
Was it Robinhood? That's a serious guess. No?
Robinhood.
You've been resistant on it. I was like, maybe. So, Zoom?
No, Zoom.
That would be out of left field.
That's still on the stock market? No.
It is.
Today, Roy, and I had it up on screen just earlier. You just missed it. I today added to my QQQ position, which is now the biggest in my dividend portfolio, and I bought some Amazon. I bought a cool 19 shares of Amazon today.
Oh,
and I bought 7 shares of good old QQQ. And yeah, I bought it ahead of earnings. And I think that they're going to do well. I think that they're totally. So a couple things for Amazon. And like, see, here's the thing with predictions and when I make them. Sometimes it ends up great. Like today, for example, when I'm like, hey, SoFi's going to announce something on the earnings call. And they end up announcing something. And I'm like, was that me? And then sometimes I like put both feet in my mouth, not one, just both of them. Like when I'm like, oh yeah, Palantir this, or when I'm like, what was the other one? Oh, Microsoft's going to buy CrowdStrike. Like that is the risk that you run with predictions. You can go both ways. I think that this quarter or next quarter is dividend time for Amazon. I think they're going to follow Meta's lead. And I think that it's like in vogue. I think they're at that point where, they're going to start to play the dividend game. And I think they're undervalued. I mean, they are trading pretty cheap relative to the other mega caps. And I don't think I can go wrong with buying it. The whole AWS, I saw Microsoft's, numbers after hours, their share of cloud. So Tanner's been on my ass to buy Amazon for a while. He's really bullish on it. So I'm happy with that purchase. I was going to buy all QQQ today, but then I was like, you know what? Amazon reports on Thursday, so I want to take advantage of that.
Ascension's comment there.
No.
Okay, so on Amazon, this is one of those that's on my not short list because I don't short stocks. Although I did have a post, ironically, right before I came on, talking about one that I would like to short. We'll maybe discuss that some other time and how terrible they are as a company. But Amazon has been on that watch list to add to a future purchase. And they're actually neck and neck with Walmart. They're actually a little bit ahead right now as far as valuation. What I think is going to happen, and throw the screen shot up, this feels to me a lot like Q3 did of last year, where everything had risen very aggressively. We went into Q3, and the market looked for any excuse to sell off. And I'm seeing that especially in those that have run a lot. And Amazon year to date has run a lot. It's up 21%, which is a lot for a large cap. It is, I give you, a better buy, I think, than anything in the Mag 7, except for maybe Tesla, but you have a lot of Tesla already. As far as valuation, it looks attractive here. I don't think it's a bad buy, but this to me looks like a classic head and shoulders shampoo. No, I'm just kidding. TA formation. And I am guessing that the market is going to look for any possible reason, because we just saw it today with Microsoft. I don't know that I don't think Jassy is the same level as Satya. And so I just think that in light of this, it's going to sell maybe back to 160 or so if things go well for me. And you too. I don't think you'd mind that, would you?
No, and so here's the cool thing, right? Because I said, okay, well, why don't I just buy it after earnings? Because then I can see how the results are going to be. But I think that Apple might be weak on Thursday. And I think Amazon might be strong on Thursday. So like that's just how I'm thinking about it right now. And then the amount that I bought like, I don't know, like 4K. I was like, okay, I'll be happy either way. If this thing goes up, I'm like, oh, thank God I bought on Tuesday. If this thing goes down, I'll be like, great, this is fantastic. But I know that I won't have like regrets either way that it goes, because it's just a starter position. Like it's so small. What did Ascension say right now?
No, the Oprah's thick SoFi bag, the name, and then you're going to start pumping Tattooed Chef. This is Bootleg Weekly. By the way, I like the new abbreviation. But no, yeah, it's Amazon is one of those companies where I don't own at all. I don't own any of the Magnificent Seven except for Tesla, of course. Well, and other than owning index funds like you do, but like Amazon's going to do well, guys. Like they benefit from the AI wave. They benefit from commerce continuing to improve and revitalize, from normalization across the globe, which I think that we'll actually begin to see in the next 1 to 2 years. And of course, they're just killing it with automation and machine learning. They're throwing out new products all the time. They can't buy a robot company, but other than that, like everything has gone right for them over the last year and a half.
Yeah, I mean, we've talked about this before, and I think Matt and I have talked about how we sort of approached it very differently, like complete opposite actually, where like I started off in my early 20s super risky, and now that I'm making more money and I can actually put in like pretty solid chunks every month or every 2 weeks, I'm starting to build a really strong foundation of more durable compounders that are sustainably so, as opposed to like the roulette table picks. Whereas he did it completely the opposite. Like he started out as a dividend investor, and now he's going in heavy into like Rocket Lab and all these companies that are like, they offer more risk. But right now, I mean, like as it stands, QQQ is the largest position in my dividend portfolio. I think if I were to stack it up against everything, crypto included, it would be number 5. It's about 3.5% of my portfolio. I've only started accumulating QQQ like in the last month, like in July alone. Yeah. I own Apple, I own Microsoft, and now I own Amazon. So it's like the third mega cap company that I own. Tesla used to be the only one. And so it's just, I think, a part of forming a solid foundation that then I can sleep easier at night, quote unquote, because I don't want to throw all that money into Tesla, or throw all that money into, like, however confident I am in one single stock. I think that like I want to start to build that layer. And I think that the cornerstone of my dividend portfolio is going to be QQQ. Like I want to build QQQ to be, 25, 30, 35% of the dividend portfolio and eventually end up replacing Tesla as my number one pick. It's going to take a long time for it to get there. I think Tesla is like 10x bigger than my QQQ right now. But, that's at least the high level thesis that I'm operating under as it stands. Like I just turned 30, right?
Yeah. Or Tesla can tank completely and just, go down to the Gordon Johnson valuation.
Dude, my entire portfolio went up 15% over the past month just because of Tesla. My entire portfolio. And I was like, and it's not a small portfolio by any stretch. It's like, that's big numbers that Tesla's putting up. And I was like, oh, hey, baby, like you woke up. Like, that's amazing.
Yeah.
But, Tesla has a mind of its own. Like sometimes it'll go up, sometimes down, sometimes circles. So the point is like, as I'm going into this like new decade, I know it sounds kind of cheesy, but like I want to build more durable, sustainable compounders that are predictable over time and maybe pay me a little bit to hold them. That's it.
And yet you make fun of boring PayPal that all it does is print money and buy back its shares.
Bro, if PayPal paid a dividend, I would buy PayPal hand over fist all day, every day.
All right. Alex, Chris, you heard it. Make it happen, please.
Yeah, but I mean, they don't pay a dividend. And as it stands, like I said earlier in this call, should I just sell PayPal to buy Palantir and just ride the Palantir earnings? And then, maybe, I don't know. We'll see.
Honestly, so I sold a bunch of puts, and I mean a bunch on SoFi. I already talked about it a number of times, and sold a decent number. Ended up, I just sold one initially, and I sold a number of more as well as PayPal kept falling, and I think it fell to 57. I'm like, this is stupid. I was selling puts for 55. Premiums were actually really good on that because I'm like, I either get anything could happen between now and Friday, right? Like market almost fell to pieces here after hours, but I don't mind owning more SoFi, a lot more SoFi at 650 and PayPal at 57, but I don't think either are going there, especially PayPal. Next week is Palantir, and so I am going to be selling cash secured puts on Palantir. I'm going to put it at a price I wouldn't mind owning more, but I wouldn't be quite as excited about it just because it's such a big piece of my portfolio. I don't mind adding to that if it gets to that valuation, but that's what I'm doing is I'm going to sell puts where I'd like it to be. And then depending on how things look at that time, Robinhood has actually come down. I don't know if you track that very often, but I think it's just over $20 a share. Yeah, 2040 today, down 3.68. Some of that's on the weakness of the sector this week, and also on the weakness that Bitcoin has recently, along with that rumor that the U.S. is maybe going to start selling its Bitcoin hoard. So yeah, if that keeps falling like into earnings, like it just with the all the cash that I have right now, it's like I might actually do some puts on Robinhood even after that. And I'm not telling anybody else to do it. I'm just saying that's what I'm doing. I've been doing this for a few years now as far as selling options. So I know how to be cautious for me, and that maybe look different from you. But yeah.
I think that for me right now, a thought that crossed my mind was like, look, what if I sell PayPal and just put it into SoFi? Like if SoFi is going to have the stock reaction that it does, and if PayPal has the stock reaction that it does, I'm like, okay, well, like you saw me earlier in this call. Like, how much do I know about PayPal? I literally could not, hold a 10-minute talk on PayPal. I just bought it because I thought it was, undervalued based on like what Steve has said, so on and so forth. And it's like a super small portion of my portfolio, like money that I would put on basketball games, basically. So I'm like, okay, cool. Like, let's ride it out. Like, but now, it hasn't really moved, and neither has SoFi. And I'm like, okay, well, there's only one of these that I actually know about. I think that was the same logic for Palantir way back in the day.
Yeah, no, and that makes sense. There's even in my portfolio, as concentrated as it is, there's names that I am less confident in, and I know a little bit less. You only have so much time. So, I have a small Bitcoin mining stock that I have. Really is a swing trade over 1.5 to 2 years. And I have one other name there that's, a little bit speculative. So, and Nubank, which is a newer position. I don't know it quite as well. So, yeah, different confidence levels, and some of that's from just knowing a little bit more or less about a stock. But I like what you're doing with shifting over to a little bit more conservative now that you have a good chunk of net worth in the stock market, especially. And you can build around that. That way, if you see something like a Rocket Lab or a Palantir that you deem risky, but there's some good reward there, you can do that with a small position in your portfolio, and that's just fun money for you.
Bro, I honestly we've been in a very good year so far, and so I'm attributing it to that. But the dividend portfolio, there's only 4 positions that are in the red for me. And one of them is BMY. I'm down 2%. Starwood, I'm down 3%. The McDonald's, I'm down 9%. And the 4th one is good old trusty QQQ, where I'm down 6% on QQQ because I just buy the tops, which is hilarious. But, I have 28 positions in that dividend portfolio. So 24 of them are green. And that's not normal. That's just attributable to the fact that we're in a really good year. But it also helps me to be equalized in terms of a lot of my returns, because back when I had only the growth stuff, sometimes the entire market was green and my stuff was red. Sometimes my stuff was super green and the market was red. No correlation at all. It followed the Russell. It didn't follow the QQQ or the SPY or whatever. Whereas with this, on any given day, I know that there's some stocks that are appreciating for me, even if some others are falling in terms of the value. So I just feel better about it,
Yeah. What about the beginning of the day? As you said, end of the day, you feel the same way when you wake up? I'm just kidding.
I don't honestly, man. I don't really look. I have to check what SoFi closed at today on this live stream. Yeah. Because I came home at 6:37. SoFi was not on my mind, and food was on my mind.
That's one of the best things about having the position and job that I have right now is it takes a lot of my time and attention, and so there's a rare day when I have time to just stare at my screen every few minutes. But there's some days where I'm I'll check in maybe at noon and maybe not. But you'll try to follow actually a lot of times I'll be going through X and I'll be looking at different headlines and stuff, and I'll be like, wow, that's really negative. Then I'll look at the stock and I'm like, huh, it's up. Okay. Go figure.
Yeah, that's exactly it. Anyways, shall we call it there? Any other things you wanted to cover on this bootleg?
Yeah, last thing is you mentioned that when you buy, it tends to be the local top. Could you let me know and just text me when you buy Palantir so I can take some off the table?
Dude, you should be buying me a steak dinner and making me a PowerPoint, because when I sold, that's when Palantir started running, okay? So if there's any viewers out there, make a very hefty donation and I will sell PayPal for you. And then I will watch as it goes to 100, or I will sell SoFi, a little bit of SoFi, and I'll watch as it goes up for you guys. Or any other stock that I hold that you want me to sell, let me know. And we can make that happen. But I have the kiss of death in the short term. I bought the QQ. Hold on. I tweeted about this today.
This man is great because he sacrifices himself, just throwing himself on that as basically the same thing as Jim Cramer, but even more strongly.
Okay, so hold on. I'm glad that you mentioned good old JC.
Yeah. He is impressive, and you're impressive as well.
Yeah. So July 9th, officially a QQQ holder. First purchase of many. What date was this? July 17th. QQQ, 3%. Hit buyers, you're welcome. Sincerely, a younger, handsomer JC. And then QQQ down 9.1% from recent highs, close to 10% to the technical definition of a correction today. And I was like, do you want me to keep buying QQQ? And then I did. So there you go, guys. I do this for you. It's going to keep going down. I'm currently down on my QQQ position, and I'm fine with that. I'm fine to keep buying lower. So puts on the market and thank me later.
I think Ross is asking if you're buying Celsius and that's a problem with the stock.
No, I am not buying Celsius. I should be buying Celsius, actually. I'm going to...
Don't do it. You'll break it. You'll break the stock. Don't do it, Tevis. You bought some PayPal. That's the freaking problem with PayPal. Dude.
Yeah.
Thank you for not buying Robinhood. Thank you for not buying Palantir. I love you.
I'm gonna buy Palantir again.
No.
just so it falls, and so I don't get so much shit in October. Okay, that's the whole thing that I'm gonna do. That's my strategy right now.
Just give me like a 2-hour warning or something so I can get things in order.
It's the worst. I'm glad that Ross brought it up because I am looking to buy some Celsius probably this week. We'll see. Maybe tomorrow.
Have they had earnings yet, or when did they have earnings? Because I'm actually interested in that one too.
I think next week or next 2 weeks. I don't think they've had it yet.
August 6th. So yeah, it is coming up next week, next Tuesday. So that'll be one that we will talk about on the next Bootleg Weekly.
Absolutely. Everybody, thank you so much for sticking with us through our ramblings and for being here. And we'll see you next week on Bootleg Weekly.